This discussion is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. This is not a recommendation to trade, buy, or sell any companies discussed. We recommend you consult with a professional investment advisor before transacting in any securities mentioned in this discussion. By viewing or listening to this event, you agree to the terms and conditions, which you can view in full at msmicrocaps.com.
Well, here we go. Well, thank you guys for being here today, Leo, Jeremy. And we've actually talked before, and I think it was Nicholas Cordellucci recommended that we talk to you guys, if I recall correctly.
Yes,
Yeah. And so, how do you know Nicholas? By the way, he's at Atrium Research. If everybody listening here.
yes, I met him throughout Mathieu Martin from Rivemont because in the past I did an internship with Mathieu from Rivemont Microcap, and I think Canara Biotech was presenting in one of the investor event of Mathieu, and the guy from Atrium, Nick, was there, and we met, and he came to see me, and that's how I reached out to him, and.
Great, great.
He's a great guy. I met him too separately. I was reaching out on him to LinkedIn and then went to the Planet Microcap conference. I think do you know that conference, Maj?
Very well, yeah, yeah.
Very good, yeah. So I met him there. I think he was one of the sponsored companies, and we just discussed because our business, is a bit similar. There's some differences, but what we do is a little bit similar. So no, he's a great guy.
Beautiful, beautiful. All right, so you have what's you have a Substack which we're going to get into, which is small, I guess, and mid cap companies, and you have a very wide net of things you guys cover, which is cool to see, and I'll have some commentary around that. But let's talk about your history a little bit, how you guys met, and your history before investing, and how you got into investing, and where we are today, and then we'll just you get a nice little discussion about your investment process, maybe some pitches that you like, and your goal for the Substack moving forward.
Perfect.
Yeah, for sure. I can start on my story if you want, Jay, and then you go after. So yeah, my name is Leo Trudell from Quebec City in Canada. So French Canadian like Jeremy, and I think as most investors and people following the investing world, I've been passionate since I was young, reading all the books. And then at 20 years old, I moved from Quebec City to Montreal, so the bigger city in the province, to learn finance and investing. And then I started my career at Tonus Capital, which is a small hedge fund based in Montreal. They invest in small caps, a bit micro caps as well, North American. And I was started to work with the CEO there, Philip Hines, and I've learned a lot from kind of his philosophy. And the philosophy I've built throughout the year was a bit based on one of his key principle, which is about value. And for him, and from what we do at Aurelion as well, is no matter how great the company is, the industry trends, the value of the business, well, the value of the stock will, I think, always converge back to its real value. And so I think that was a key principle I've discovered there. And Philip Hines was really great, great to give me a chance. And I think it was the best fund in 2022 in Canada and in 2023 as well. And he did great in 24. So I was really lucky to start there. And then I did a year at Pembroke, almost a year at Pembroke Management, which is similar as well, but long only investment manager. So a fund that invests in small caps, micro caps, and also large caps, a bit everywhere. I was doing healthcare over there. So healthcare is interesting, but it's tough. So it was very, very great to start learning those businesses. But there's so much going on there because the regulation changes. And anyway, it was a great, interesting story. And I worked with a great PM there called Martin Sekov, which honestly I've been really lucky because I started my career with two great, person that really were really great to work with and super talented. And something I picked up there was the free cash flow in my investment philosophy with Jeremy. Is that I can talk for a long time about free cash flow, but I believe that it's really what drives the business in the long run. And most analysts, they overlook free cash flow. Then I worked at for a summer helping in the research team and learning as well at PineStone, which is a global asset managers with 80 billion in AUM now, and that's large caps only. So it was really different. But so yeah, so I've picked up, I think, the things that I preferred, and I've been building my investment philosophy over the last years. And I think now we have something solid with Jeremy. We've been doing some good returns, and I've met Jeremy, and now we're focusing on Aurelion together.
Yeah, so like you can see, Leo has some great experience and more big funds than me, maybe. So I think that's a bit where we complement each other, because maybe Leo has more of the technical, fundamental background, more big funds, and I have maybe more of a individual background. Like I did some work for, like I said before, with Rivemont Microcap as an analyst for only microcap from in North America. I studied like Leo in finance in Montreal, not the same school, but so how we met. Oh, we didn't cover this. Leo sent me a DM in this summer, and he was like, "Hey, it's great what you do, Aurelion. I don't think anyone does this really in Canada, so maybe we could meet. And I really like what you do. Maybe I can help you push it further." So we let's say it was a good match, and we met like this and started working really hard, and now we here with you, Maj, in this skull session. And yeah, so I'm more maybe more the idea. Leo generates some really good ideas, maybe in volumes. I'm more of the ID generator, and Leo is more of the analyst for modeling. Is a bit better than me, so we think differently, but together I think it's a really, really good match, and we already verify each other. So I think that's what makes great our team and our Aurelion mindset.
That's great to see that. And how long ago did you meet each other? How long has it been now since you met?
1 year almost.
Okay, so you're still in a really good dating period.
Yeah.
Yeah. No ring yet. No ring yet.
And no big fights yet, right? So that's
No,
good.
not yet.
Yeah, excellent. So perfect. All right, so now let's jump into everything here. Oh, by the way, yeah, how old are you, both of you?
I'm 23. Yeah, I turned 23 this summer, and Leo is 22.
Yeah, turning 23 soon as well.
Okay.
Beautiful. All right, cool.
We
So
look older.
No, yeah, I was gonna say, you look maybe younger. So,
Yeah, that's what they told me.
that's great, right? Yeah. So I'm gonna get your Substack up for a second so you can introduce what you guys do here, and then we'll get into some. Well, you know what? Before we even do let's talk about some of your philosophies and um how what your process looks like. Um, so let's talk about, when I was going over your Substack. What's funny with me is there's certain areas I avoid because I just don't understand some of those industries so much. And I've always said, like, the things that investors avoid or a person avoids can be someone else's treasure. And so I look at some of the places you're investing in, insurance, banking, chemicals, commodities, some really maybe not easy industries to analyze, and this is probably maybe where you're getting some of your edge, but tell me guys about what that looks like. I mean, it seems like you have a pretty wide net of what you look at, or do you have a specialty that you like?
Yeah, Leo, you want to say it?
Yeah. Well, simply the view is that we're really generalists and we try to pick what's
Everything.
the best sector right now, what's the best stock right now. Like obviously, if we don't understand and it's a super complicated biotech, we won't touch that. But if we understand a bit the basics, and then at first we think it's interesting, then we deep dive and we're really looking for returns. So we're not going to stay, let's say, the tankers, for example, is a sector that Jeremy liked a lot, and it's been kind of doing great in that one. Like if we start not liking that sector, we'll move away from that sector to chemicals, for example. So we're really moving away, but obviously it takes time to understand them. So that's why we stay concentrated. Like we won't have 100 ideas or 50 ideas. Typically, we stick 10 to 20 in the portfolio.
Now we are 10.
Yeah,
Okay, so you have a little bit of mainly a concentrated portfolio now. You're
exactly.
not
Yeah.
okay, all right.
Yeah.
And when you talked about cash flow being Leo, a big part of, and I'm assuming Jeremy too, of what you're looking for, and some of these industries like insurance, banking, tankers, chemicals, that's very a commodity. It's very important. They're very important piece of the puzzle there, right?
Yeah.
Yes.
And sometimes I'm wondering in those industries, it's a little muddy to go through that. Meaning that the earnings might look not so good, but the cash flow can look good in some of these industries, I assume. So. Um, are you looking for those kind of disconnects where maybe the earnings don't look good and the cash flow looks better, or where people are
Uh,
missing certain things?
I would say that usually when it's commodities, because I'm more of the commodity guy and Leo is more of every other more general stuff, but you understand it as well. But maybe I have more of the feeling and the skill set for commodity. So usually I just find a setup, and it can be chemicals and it can be mining, can be anything. But if I have a good feeling and I think that it's overlooked or sentiment is bad, but it shouldn't be as bad as it is. Like chemical, just pick it up, and we have Huntsman under in the index, and stock is up like Leo maybe 40% since 2 months, maybe.
What stock was that one?
Huntsman,
Okay. Oh yeah,
HTM. Yeah,
the
it's construction insulation stocks. It's an old stock, but it's the stock that people doesn't really love because of management is really family owned, and CEO likes to spend money. And well, so that, let's say, we don't need all, we don't have a lot of criteria. So sometimes you have PMs or analysts that, okay, I want this above this cash flow, or I want insane management and everything. But we really do case by case. And if I find a really good setup and ID, that's when Leo goes in. And after I like pitch more the macro and the sector view. Leo is like, okay, this stock, their growth is not as good as it should. Maybe we wait, or maybe this cash flow is good. So that's how we select the one we enter, and not in the sector that maybe I look at. If
And
it's
to be clear, guy, you guys you're full-time investors here. You're managing your own money right now, right?
yeah, every stocks in the index is on it personally. So like we don't have an ETF, but we
right.
personally purchase and sell every stock that is in the index. So the index is like 10 or usually 10 or 15 stocks. It's all
Mhm.
equally weight. And it's like if we remove one from the index, that's when we would profit taking, because we don't
Okay.
like cut position, and we don't take profits. It's either it's in the index or it's removed.
It's in or out. I
Yeah,
like
Yes.
exactly. Yeah.
I like
We
that.
wanted it to be really uniform,
Mhm.
and to be, it's to show that our ideas work and they are good, but it's not to show that we are fun and we trade. We don't trade. So
Mhm.
we could do even better if it was like in and out, but that's not the main goal with the index.
Well, your index is doing pretty good, but so maybe
Yeah, but it could get do
we
even better.
yeah. So we're gonna get to that in a second. But I want to talk about the. I mean, so I'm the chemical business the industry says that you see a lot of bad sentiment about that right now, where a lot of these stocks are getting killed, and you read about it on Twitter right now, and people are wondering when it's gonna come back. So all right, can you tell us what's going on in the chemical industry? What is the reason for the weakness in some of these stocks, and why you believe that's potentially going to be short-lived, or do you think it's going to that the sector's turning, or are you looking for
Yeah.
companies that are going to be good, but you still believe the sector will be depressed? Do you think it's still company-specific recovery potentially for some companies, or the industry is going to recover?
Usually we just select the stocks that in the sector that we think is getting too cheap. Even in the market, we try to enter. My strategy is to enter before, like you said, like we are on Twitter as well, and we read every research report from Morgan Stanley, Jeffries, everything. And sentiment isn't really great for chemicals. Like you could think, you would wonder why is Huntsman up 40% in the last 2 months, but it doesn't always explain with amazing earnings, or because now it's really China. I think that it is affecting the market and the not cutting supply, but it's not really. They can't sell the company with chemicals as high as they use it to, and they
Right.
didn't. They don't get the not matière première, but they don't get the materials cheaper as they. So they produce at more expensive, but they can't sell as expensive as they were before. So it's not really good for them. But usually, I try to enter before the sentiment turns. So that's
Okay.
why maybe now, okay, it doesn't look as good, but it's like key inflection
Inflection
point.
point.
Sorry,
Yeah.
yeah, and if you time it well, and you're a bit lucky, but it's bad kid, but maybe more of a micro skill set, and it can work, and it work in with tankers. The most people and analysts were like, okay, the tanker, maybe it was a crude oil tanker. Sentiment isn't great. Double cycle is coming to an end. Fine, but we just had one more year of bull cycle, so it's not always. Sometimes it's unexpected. So in chemicals, I would say that I would agree, and I say it in what we publish. But sentiment isn't great, but it could be better than what people think.
Okay. And you're saying, and if I heard you correctly, you're saying that the input it's costing more to
To
purchase
produce,
to produce, but they can't raise prices. You're saying,
yes.
yeah.
So if you look at every chart of every, it's polyurethane, polyethylene. Maybe I don't
Okay.
say it good in English, but it's a lot of complicated chemicals word. But all of those are are going up.
Are they
But
okay?
yeah, but people don't look at this. But before we entered, let's say Huntsman, or we were a bit in Leon Del Basel, which is way a bigger company, but the price were all falling. So our analysis, what does it won't continue like this, and since we enter it, the price are going back up. So maybe that helped it a bit.
Yeah.
And but you have a couple is it four you have more analysts on your team besides you two, right? You have a couple more analysts.
We have an intern and we have a research associate.
Okay, great. And on the shipping, you are interested in shipping, and maybe you could, you said here, for example, a lot of people think valuation metrics like price over NAV or even an EBITDA are what drive shipping stocks. In reality, um, it's much less than people expect. So what is it that moves shipping stocks from what you're
Usually people get, let's say, I don't know if it would happen to you, Maj, but you would enter shipping and learn a bit about it, read about it, maybe read a couple thematic research on shipping, a couple of books on shipping, and you think you're ready, and maybe you get lucky, or what's most like in trading, maybe day trading, you went out on burn and you lost everything. Because even if every fundamentals are looking good,
right.
it can go like this.
Right. That's
So
always
yeah,
they
so
look
there's
sometimes they look
really
so
a
cheap on paper, right? They look so cheap sometimes,
yes.
Yeah.
but maybe that's not what's right. Yeah, I remember.
PNAVs are below one. It's really cheap. They're doing a lot of money, but poof, it doesn't work. And so it's really sentiment driven market.
It's the most
macro.
cyclical stock basically you can have almost.
What was that, Leo?
It's kind of the most cyclical stocks you can have.
Oh yeah.
Yeah.
Okay.
It's you need to time every cycle.
Exactly. It's all about timing. And sometimes when it starts looking really great, where the earnings are really strong, the dividend yield, sometimes you approach 25%. It's like, okay, why would I not buy the stocks? It's 25%, earnings are growing. But then, the spot rates turn, and then the stock crashes 50%, and now you're at the trough of the cycle again, and you just have to time it at the correct moment. So a lot of it is that looking at the spot prices of oil, of shipping rates, which is what we do and what we try to look at for the right time to enter the companies. And also you have to pick the great companies. Like Jeremy says, I think you're good to select the great ones, but you can maybe talk about what are
because sometimes you would make a basket of stocks in this sector, and one would be up 60% and one would be up 20%. So you really need to, in shipping, management is important from our point of view, because some management are really good to, let's say, Greeks or Norwegian, to lock in better rates. So they do more each day with each tanker at current prices than the same prices for another company. So they really, some really have an edge. If you choose the right one with a good management team, with a good track record, you can do really, really better than other in the same sector. So that's what we try to do. And with shipping, there's a lot of sometimes really, really good analysts. They use econometrics to time everything together.
Okay. Awesome. I'm actually going to share your Substack right now, so we can all look at it when we're talking some more here. Think you see it now?
Yes.
Beautiful. Yeah. So so and I was, as I was saying earlier, you have lots of different your articles. You have defense. Kamal, you talked about Celsius here, I think I saw. So when you look at let's look at your index though here, so this index now basically is tracking your portfolio, right?
Exactly.
It's a real time portfolio. Okay, and so it's doing really well here.
It's up 90%, Leo, now.
Yeah, up as of today, it's up 90% since July 1st. So continue to do well in early January, with tankers continue to improve. We have Brooker that did well, and
Italian.
CNC as well. Some of the names, yeah.
Right, and what is your and here's you talk about equally weighted. You talked about that. What is your turnover? You typically been in a stock. How long do you usually hold these stocks? What's the range I guess so far, the range you've held a stock before you sold it?
Yeah. The goal typically is something longer term, like a 3 to 5 year. Like when we analyze a stock, it's for a longer term story. But often, if let's say we buy a company like Brooker that we think has a compelling 3 to 5 year story, we'll do the analysis for 3 to 5 year. But if an earnings goes very well and it's up 30-40% after an earnings,
we're out.
And then we think the valuation is a bit stretched, we'll completely remove it, and then we'll wait to add it. But we'll still cover it. We'll still talk to investor relations. So typically, turnover rate is about once every 2 to 3 weeks, because our companies are moving a lot with catalysts. But our goal is 3 to 5 year on average.
It's really sentiment driven, but every stock that is in the index, the thesis at the beginning, is a stock that you could hold for 1, 2, 3 years.
Okay, but you're trying to find these stocks at key inflections, basically.
Yes, exactly.
Yeah,
that's our.
Yeah. And I see you have a tab here for thematic research here. This is where you talk about different industries that you're kind of looking at.
Yes. And we don't add to the index everything we do in thematic. So usually I do a thematic research, or Leo does one, or one of the other guys at Aurelion, and we try to cover one sector we think is interesting, cheap. We provide 2 actionable ideas that maybe are worth a better look. And after we did the thematic, sometimes we add it directly to the index, but we always do a full analysis with an individual report and post on Substack for each IDs that are added.
Great. So let's talk about we'll come back to some stock picks in a second, some trends, but I mean, how much of your process can you share? I mean, I know there's you want to keep some of it probably, behind the scenes.
How we find IDs, you mean?
Yeah, what is your how do you find ideas, source them, and what kind of what do you are you referencing industry? Are you paying for industry material because you have a lot of these different industries you're looking at? So sourcing, idea generation, what you use for research, whatever you can share there.
Yeah, Leo, do you want me to do it?
I can start off and then you can complete.
Okay.
But something we really like to do is to go in persons to those investor conference. Like Planet Microcap, for example, was an interesting one. And our goal is kind of like a few hours in the day is to have a lot of ideas that really looks interesting. Like for example, it's a conference, or it's someone we trust, or it's another equity research that publish their ideas. And then after that, once we have a lot of them, we kind of select the ones that we find the most compelling. And so we typically don't do a screening because we think overall, if you do a screening, it will often hide the potential, because we look at a company that's in a turnaround story, like that their margins are going to come back up, that the multiple will come back on the earnings.
Hey, Leo, I could precise just this.
Yeah.
For the screening part, we don't believe a lot in screening unless we have identified one sector. But when we don't do screening because we believe that if you do too much screening, I know Maj, you do a lot of screening, so everyone has his method and we respect everyone methods. No, but it's true. But for us, for the screening, if you do screening, you find ideas that won't come as natural. It's like being on a dating app, and you look for a new girl, but it doesn't come naturally to you like in your class, So we feel it's our method. Maybe sometimes I look at peers and okay, this one is nice, and from the other peers I find another one, or I hear about this one on Twitter. So it's not ideas that okay, I have a list of 100 stocks, I choose this one. So it's really naturally.
Sure, and I think like, and the screening that I mean, for screening for me was like when I do screen, I screen with maybe one or two or three, like maybe two or three parameters. I'm usually trying to look for like screens that look bad or ugly. So give me some bad looking numbers,
but we don't have
that's interesting.
criteria.
Yeah, okay.
We don't have parameters. That's what we
right. Yeah.
So we can't really screen,
Sure. But you saw in turnarounds though, like to find these companies that look ugly, right?
Yeah.
And then trying to like, again, losing money or and then trying to figure out by reading the releases maybe if they're going to. But I agree with you on screen. Like if you can screen, you can over screen.
Yes, you can.
And miss too many opportunities, right? Yeah. Because I mean, in these days, you need to get a first mover advantage. You got to trick the market. So you're trying to find these stocks that people maybe the screen hasn't even found yet. I think, right? But I'm big on reading press releases. I don't know. Do you guys like to read press releases to kind of see nothing like that? No.
We only on the stock only we have under active coverage.
Okay,
but I don't screen like maybe some microcap guys would do every press release of every morning. Never.
It's also different because we'll target like not microcaps, more small to mid. So it's already priced in that press release if you're on a like a $5 billion company. Yeah.
There's no edge.
Sure. Yeah. So how about earnings call transcripts, these kind of things? Is that any idea discovery there for you at all? Or a little bit. So are you basically would you say most of your research is first identifying a theme and then looking for stocks in that theme? Is that how I'm thinking about how you're doing this?
It could be like this or the opposite. But yeah.
Yeah, go ahead, Jeremy.
Maybe I find one stock and okay, this industry, and from this stock and this industry, I will find another better one because it's the biggest competitor, maybe.
Right. Okay. So that
It's
first.
all,
So when you found Hunts, for example, right?
yeah.
What was the process that you guys found that stock, for
I
example?
already know Hans because, I mean, my dad is in Quebec, in Canada, is the biggest, as a company of the biggest insulation company. So we work, I use it to work for him. So I know Huntsman pretty well. So I knew that it was a good turnaround. So this one maybe not a good example, but
No,
yeah.
well, yeah, no, that's a good example. That's part of discovery. I mean, and that's part of, I
We
think.
no, but Leo has had a point on more on the boots research, Leo.
Yeah. Well, yeah. What we like to do, like for example, uh, a company we found interesting, and I was in Plant Microcap in Toronto this fall, and we discussed, and one of the ones that was the best, well, that was looked interesting, but we weren't really convinced because obviously the management teams are quite promotional typically. Was Canara Biotech. So I think it's still close to a macro cap, and that's a cannabis company. So at first it's like, okay, the industry, everyone knows it super well at first, and then everything crashed, and now kind of like what we think is that there's going to be really consolidation in the industry because many top players might go bankrupt. So it's only going to be a 2 3 that are going to keep the economies of scale to continue, and we think Canara is a winner of this kind of industry consolidation. And what we did is we didn't really trust what management was telling us, so we were able to visit in person their
Facility.
facilities.
Yeah.
Yeah,
Okay.
and well,
It's
honestly, it
huge.
really smells, so you don't take some nice clothes to go there because it's pretty
It's
tough.
1 million square feet, Leo.
Yeah, it's massive, and basically their whole thesis is half of our facility is completed, and then the other half is completely empty. We can just fill it up, and we're gonna basically double our revenues in 3 years. So it looks
Wow.
amazing. Margins are gonna go up. Capex is small, so they tell you this at a
But
conference, and you don't believe it. But then you actually go there, you see that the whole thing is ready. The lights are there. You're just missing the plant and the dirt, basically. So that's
And what's this? What's the symbol on this one, Leo? The symbol?
this love on the TSX.
Okay. Okay.
but
OVE. Yeah.
they have a huge edge because they got really lucky. There was a big company that went bankrupt before finishing or almost finishing the huge facility. So they built it for like 300 million,
Yeah.
and Canara guys bought it back from BMO for like 30 million cash.
Oh, wow.
So they own this real estate that is worth this, but at this price. And they have
Right.
another one that is not sure if I can mention it, but it's worth like 3 times what they paid. And the guy that sold it isn't really happy to have sold it, you know.
Oh, wow. Okay. And I know that um Martin likes the cannabis stocks a lot too, I
Yeah,
think.
when I was at Martin Fund, I could read love from beginning to end. So that's
Right.
why it's an idea I
Right,
bring
great.
with
What do you
me.
think, Maj, about the cannabis industry?
Well, yeah, it's a good question. Well, being here in the U.S., I basically wrote it off here. I didn't even. I assumed that it was a mess here in the U.S. You remember back when it made back was it the 2017, 18, 19? It was just everybody's talking about it, and there was so much fraud in it too, right? For a while, so I just basically wrote it all off. I didn't want to be any
But
part.
it's different because here it's state it's
Right.
like 90% of it it's states owned. So your customer is the state. So you're kind of sure that if you're in their lucky pocket, they will always order new. So
Yeah,
that's
and the right. So when I interviewed did a skull session with Martin, and I didn't even I like okay maybe I should take a look at this and
Yeah.
the regulatory environment the reasons not to invest in the U.S. right or U.S. companies
Mhm.
were a lot different than maybe some reasons not to invest in Canada at the time. So in the U.S. it was more regulatory situation, right, making it tough. In Canada, You just had to find the right operator, right? 'Cause it was more of a competitive
Yes,
experience.
that's it.
Find the right,
And no
find a few
tariffs.
leaders, right? And find the five leaders maybe, or whatever they are. I don't know how many there are. And you can ride that horse, right?
And they have no tariffs because produced in Quebec and sold in Quebec for now. So that's good for now.
Great. Yeah. So we actually added. I can't why can't I remember the symbol
And
here?
electricity is really cheap in Quebec, maybe most cheap in all of US and Canada. So that's good.
Let me bring up a stock here. That we just added this to our index that we have here.
Okay.
And it's in the cannabis sector.
Is it Cronox or Oxley?
No, they just actually are about to. They just expanded their manufacturing facility.
Okay.
And they're obviously in Canada.
Is it Rubicon?
There you go. Yeah.
Okay. Leo
Yeah.
did a one-on-one with them, I think.
Yeah, I had a one-on-one with the CEO.
The girl, yeah.
Yeah, I think they could be one of the winners as well in Canada in like the consolidation. It's just for me the story didn't look as much as a straightforward growth story than
Less
Canara,
appealing, yeah.
because Canara had already the capex installed. Everything was, there's kind of no execution risk. It's only you just fill it up. You're waiting for demand to continue to go up. That's why I liked it better. But I think it's a good name as well. That makes sense.
Good. I'll send you the clip on that too, so you can take a look at it.
Okay,
But
nice.
it's more premium cannabis at Rubicon.
I think, yeah.
So do you look at so you said that you're kind of obsessive with cash flow, finding trends.
Yeah.
How about like special situations? Like, if you find out a stock is going to do a capital restructure and the market hasn't figured it out yet, will you go in these special situation kind of things, or are you looking for just more fundamentally driven type of plays?
We're gonna prefer fundamental typically. Like for me, the best company, the best investment is a great quality company that has currently an issue. The market doesn't like it. I figure out it's short term. So I enter the stock and then it comes back. That's like the golden for me in terms of quality. So we'll look more fundamental, but it still needs to be for us kind of some quality, because when you're in the small to mid cap space, there's lots of great companies with great modes, great trends, but when there's an issue, a small issue, for example, with a customer or an end market is not performing well, then I think often some investor gets overly concerned. The stock goes down way too much, and it creates a great opportunity to come back.
Beautiful. I love that.
But it's not really our edge to do the special situation. So it's not really something in our skill set yet. So maybe we try to avoid it a bit.
and again, fundamentals, not much technical analysis. It's not part. You don't reading charts isn't part of what you're doing at all. It's all purely fundamental driven for the most part, or
mostly.
And you like to interview management teams, which is great. Are you so and you said about site visits. So do you do a lot of site visits or only when necessary? Because you talked about visiting.
If it's close, for
yeah.
sure.
Yeah, if it's in Venezuela, sometimes might be difficult to go, but we'll try. Especially if it's in
Quebec,
Canada
we
or North
going.
America, we'll try to go. And for us, I think it's really important because it allows you to, like, you're not going to get better numbers or better information in the market, but you're still going to understand much better, and you can, because often the stories are management says you were going to do, for example, that they're guiding for 2030 this number, and the market doesn't believe it, and so if you believe with them, you'll make money. And so sometimes in those stories we'll go visit the company, and if typically it's going to be way easier for us to either trust them or see, okay, this plan makes no sense, and so we'll do something else.
I would say, Maj, that if it's a micro cap, I don't know if you would agree with me, but maybe it's easier to trust the story or management on the boot, like a
boot on the ground.
boot on the ground visit, than on a call or on a Zoom. I think it's like they say, oh, we can execute, we have this facility, we can produce this number.
Yeah.
But if you don't see it in live, maybe it's less. You will
Yes.
don't look at it.
Yeah, one of the best the benefits I get out of interviewing a management team or I'm sorry, a company is if I if I have the luxury to meet the employees. So I know in one of my first site visits, I basically asked the CEO, can I please tour the facility without you for a little bit? So, he's like,
That's a
If
good
you
one.
don't want it, it's not a good sign.
he's like, sure, go ahead. So I wanted to measure how the staff felt, how happy they might have been, and are they smiling? What kind of
Is there a lot of job for you?
yeah. How's things going? Are you happy here?
Mm.
And it's amazing some of the answers you get when the CEO isn't sitting there or touring with you. So I like that to get to see that for sure. But I know on one of my site visits, and I won't mention the name, um, I only talked to management and it looked really good to me. And I went to the facility. It was a real facility, but it wasn't. It was a manufacturing facility. It just wasn't put together efficient. It didn't seem efficient, either the way it was laid out. It just seemed like, just pallets everywhere. Just nothing in an organized fashion. The stock didn't do well, for some time. New CEO came in, and and I didn't understand all of this until I saw the new facility. Oh my, it's the same facility, but it's just so much more streamlined. It was amazing, and everyone was happier too.
Execution was way better.
Yeah, execution was way better. And just because you see a lot of stuff in a facility doesn't mean it's a well-run facility. And I didn't really know that. I mean, I didn't connect the dots until I saw that the second iteration of that same facility. Wow, this is much. It just looks leaner, and it's going to flow better. And the stock did fantastic after this new guy, the new one came in. So yeah, but I guess you can at times you could
I hope you
my
bought some.
yeah, I had a lot. That was a good one. That was a good one. My war story, like the worst um mm, decision I ever made came from a site visit though. It was I made the wrong move. And I was it was in I think it was Virginia. I'm sorry, DC. And the CEO I had great site visit. I toured the facility, met the employees. Everyone's happy. The CFO was happy. He's hired. And the CEO and then gave me a ride to the airport. It was like an hour ride. He's showing me all his products. It was a construction company. Here's our products on the road. And so I was actually seeing, even validating outside the manufacturing facility all their stuff. So we start talking about capital structure and dilution. And he's like, he didn't understand. He didn't even know what it meant. I was like, I just can't own this company.
A microcap?
Yeah, I sold it. Stock goes from $2 to fucking $40, and it's still it's still. And that was back in 2016, and it's still multi-bagger. That got me in trouble, but but usually it's a good thing. I mean, it's really good. But there's been times where you just go there and you see a CEO just going through the motions and not really happy to be there, just
Or he's doing nothing, or
doing nothing. Yeah, yeah. And it just gives you this extra perspective I've noticed of really seeing if a CEO really understands the business. So I've liked that. We're actually building we're about to launch a location app where you can find companies near you.
okay.
So where it's free. It's gonna be free for a while, but it's called Investor Hound. So globally. So I can't wait to use that. I think it's going to flesh out ideas. So I can see it kind of like if you have a trend, you put the trend in because we have that, and then finding stocks around you in that trend might be pretty interesting.
So you're gonna have a map on the phone,
It's
passing from
yeah.
a Aritzia store and say okay, or Lululemon, then you can kind of see the store, the stock.
Well, yeah, it's more like site, but right now it's more of it's like find the stock near me that I want to go watch. So basically, you could do like
Okay.
a
I'm in this area, and those stocks have facilities there. That's what you mean.
yes, but you'll have to have like screen criteria. You can say I'm in this sector, and and you can see the numbers and profile. And we would love to get the view of the facility, right? At some point, the aerial view. That's actually a good suggestion, Leo, to actually zoom in on it. But that should be a lot of fun. So I'm thinking that's going to create some alpha. I'm here in Puerto Rico. I didn't know there was this many. There's some public companies here around me. But not to get away from that. So, let's talk about again. Some of your case studies. You have some that you
But
can
for
tell.
you said I think seems like you gain some. Your kind of sentiment market is when you ask employees, but if I analyze consumer like a Celsius or a Guru or a Red Bull, I would ask if it's a new company or a new product of like anything, a new hockey stick or new. My kind of uh, market sentiment barometer would be asking customers.
Right. Oh, that's like out of the Peter Lynch handbook, right? Yeah, I mean that's for sure.
We
And I
really
guess
keep it simple.
right. Do you guys do expert calls as well? Do you talk to customer? I mean, do you try and reach out and find customers or ex-employees and these kind of things? Expert calls?
I would do expert, not calls, but expert texting maybe,
Right.
not charge.
Right. So why don't you tell me about some of your winners, some of the case studies you can talk about, your things you did good, things you did bad, maybe take us through some of that, some of your trades and investments.
Maybe Guru is a good idea, Jeremy, if you wanna.
G G
You want
U
me
R
to?
G G U R U.
Yeah.
Yeah,
Okay,
Guru.
okay, okay,
Okay,
nice.
so I don't know if you're familiar with Guru.
I'm
I think
not.
you're
I'm
in
not.
Florida, Maj.
I am. Well, I spent half the year in Florida, but half the year Puerto Rico.
Now they are in Florida. They are in California.
Okay.
So Guru is like 20 years old. It's from 19. Yeah, it's just before um, 20. Yeah.
The
So
2000.
2000. Sorry.
Yeah.
So yeah, so it's an old company, and they they were profitable before entering the stock market, but since they are public, they never been profitable. So stock was like entering, I don't know when, but public, and it was at like $20. It went to 0.7 cents, 70 cents
Oh,
in April, and
yeah.
that's actually the first stock as analyst that I started coverage on LinkedIn, and it was my first report. And stock is now $7. Maybe today it's they release earnings, so it's 6.8 maybe.
What's the symbol in Canada? Is it
Guru,
Canadian?
Guru,
GURU.
Just a dot,
yeah,
so is it dot V? Is it V dot
it's
V or?
TSX, TSX.
Dot
Oh,
V.
okay.
Yeah.
It's point .to, yeah.
Let me see here.
So
Yes. So it's
this
beverage.
stock,
Here it is. Well, Guru Organic
yeah,
Energy, right?
Exactly.
yeah. So
Okay.
I was a big Guru consumer. Yeah, so I really like the product. So sometimes you don't want to fall in love with the story, but this time it worked. So
Yeah.
so this stock was every analyst that I read there, because there's only two analyst coverage. I think it's Stifel and it's Road Capital, so it's not really covered.
Mm-hmm.
And they weren't expecting any profit or profitability anytime soon. Maybe 2 years, in 2 years. But in
Right.
April, I really thought that because it's from Quebec, so maybe I had an edge.
Mm-hmm.
I had an edge, and people don't really invest in fight. It was 50 million market cap, so it was really small or even smaller. And I just thought, okay, this stock, everyone around me are starting to drink this. They don't need anymore to do marketing because it is everywhere. Like it's mouth to mouth. It's done,
It's
so they can
textbook
cost.
Peter Lynch,
Yeah,
literally.
Yeah,
yeah,
I'm
textbook.
thinking Peter Lynch here, like all the way here. Yeah,
Yeah,
Peter
Peter
Lynch.
Lynch
yeah,
is
yeah.
one of my guy.
Yeah.
On maybe because we really are visual when we are anywhere, or maybe I'm in Florida and I found it. What is this liquor store, or maybe it's a stocks. because in Florida, there's Flanagan's and little microcap.
Yeah, I know Thematic. Yeah, BDL.
It's really good. It's cheap, but it's good. So
Yeah.
Flanagan's was a stock I bought, and I did like 40%, and I was like, okay. Sometimes I was just younger, but yeah.
Yeah.
So Guru, it's made from tea, and the it's like tea matcha, and it's already taste sugar, so they don't add any sugar. So if it's
Okay.
zero sugar, there's no sugar added or aspartame because it's already taste.
Yeah, I can tell you, Jeremy has.
But it's energy drinks, all right? It's energy drinks.
Yeah, exactly.
Yeah, Leo can explain it better.
Yeah, Jeremy has the investing story, but as the consumer story, it's basically there's only caffeine, sparkling water, some
From
tea
tea.
for flavor, and that's basically it. So what makes it really good is that it's if you're looking for some energy during the day, there's no coffee shop around, or you don't like coffee, then this is like the go-to. It's fresh, it's cheap, it's good.
Doctors drink it in hospitals.
Yeah.
Really?
Yeah,
it's
because
kind of
it's like a coffee. You don't
Yeah.
have a good a big up and down. There's no down because it's like coffee, so it's more steady.
And
You should try it.
And it's work. You've tried it and it's given you some energy. So you've had it.
Yeah, I drink it
great.
like 3 a week.
Great. You can be a spokesperson for them. So I mean, so then they're doing 10 million in revenue. It looks like this is the last quarter here. It looks like, right? I'm looking at here.
Yeah, another quarter
Okay.
today profitable. Not as good as the other one, but still
Right.
okay.
So are you looking for this? I mean, and they don't have. Will they have to raise any more money? Well, I guess here's a question. They say they weren't profitable for years. What did they do to become profitable? Do you know what the
Okay,
plan
so
was?
they were with Pepsi, and I really wanted them to get rid of Pepsi because Pepsi cut your margins, they take your part, and they choose where you are on the tablet, in the shelves.
Right.
So if you have Monster, because Pepsi is Monster, you have Red Bull, and Guru is hidden. You don't see it, but if Guru does his own, or maybe just a guy between, and it's not Pepsi, it's way better. So their margins gone from like, I don't know exactly, but maybe from 50% to 80. So maybe
a lot of these beverage companies try and buy shelf space and lose all their margin. You know, that happens a lot of times because they partner with like a Pepsi or a Coke, and they just kill you. Even if you go into like a big brand name store like a Costco,
they are in Costco now. Yeah.
Are they nice? Okay, they
but
are.
They had a really good relationship with Circle K, which is a Quebec company. Maybe now there's some in the US because they bought a lot of 7-Elevens, but it's one of the biggest gas store. So they were in every gas store in Quebec, Ontario. So it went up.
So you also like Celsius too, right? I saw that, or maybe you did.
I did back in the days. I didn't cover it, but personally, I did. I think 100% on Celsius. I bought like at 25 and sold at the top at 90.
Nice.
It's the same thesis. I heard about it. I tasted every flavor. I asked it, "Do you like it?" I even told my mom taste it, and it just maybe was a bit lucky because it's different than Guru because it was really momentum and US marketing influencers and everything. But so when the sentiment died, I just left. So that's another thing we do.
There's a stock we're covering here on our team is a Mojo, MOJO. It's a beverage. It's a beverage. It's a small company. They just basically they're mainly in ShopRite right now. That's their biggest thing. It's a coconut beverage water. Really tastes really good. Their energy is okay. That's a new
It's
line.
a microcap.
Yeah, it's a nano cap. Yeah, and they are have a CEO who's insane about capital structure and not hemorrhaging money. So he's growing slowly, methodically. They finally cracked $1 million in revenue for the first time, like the last 4 quarters. So you might want to watch it. I mean, it's probably a little early.
Do you know Verba Mate? Who didn't
Pardon?
end well? I think it was called Verba Mate ou quelque chose ou something, Leo. I don't know.
I
But
don't know.
Mathieu Martin did
Oh,
well with this one.
really? I didn't know that. I didn't know that
So
one.
that's
No.
the kind of one. Maybe it's good, but maybe you want to avoid. But you know,
Right. Well, Mojo is interesting because, um, you know, um, if you read his press releases, he's basically telling you like you know, like if you guys don't like my stock, I don't care. You know, he's buying. I'm going to buy it. He's basically saying he's buying a stock until the valuation
okay.
gets to it. So it's pretty cool. But you might want to take a look at it and watch it. It's one of I own the stock,
Okay.
and it's not like a huge
But
position.
that's not really something we can add to the index because it's too small.
It's too small. Yeah. So what is your but I do see a microcap thing, but you're not looking at nanocaps.
It's
What's your
50 million
Yeah.
to
50,
15 billion.
15 million, 50 billion. Is that what it is?
50
million to
yeah.
Okay.
15.15 billion.
Okay. Okay. So
Maybe it's 40 million and we do it
okay.
because it's okay, but
Sure. So a true microcap. Not so no nanos. All right. Perfect. Okay. All
Mhm.
right. Awesome. Now I see. So Guru. I love that. I love those consumer kind of Peter Lynch stories, man. Right? Because it just shows like anybody can if you're just any investor, just if you're aware, you know.
it's Peter Lynch at its best.
Yeah, exactly.
Yeah. So we talked about love earlier. Did we talk about mm, Okeans eco tankers? ECO.
We talked about it before with shipping, so maybe it's a bit repetitive.
Okay, and then we have
Maybe Leo, you could do Kalian.
CGY Kalian. I see here, right?
Yeah,
What's the story here with these guys?
Yeah, this is a Canadian. So how people describe it is a Canadian diversified company. They do many things across like IT, advanced materials. They do healthcare and defense training. So that was kind of how they were portrayed first in a few years back. But in the last years, they've been turning a lot through defense. So now something like 60% of the revenue are defense. So defense in Canada, NATO, and a bit in the US, but most of the defense is in Canada and in NATO. And
they sold the division. You didn't really.
sorry.
They sold a division recently. We weren't
No,
very
so they didn't sell it yet, but one of our
okay.
thesis is that they will sell a division because basically, well, we've been discussing with management for a few quarters now, and they've been really negative about the organic growth. That's what's been the stories that some contracts in Canada were pushed. A segment was doing really bad because basically it's investment technology. They sell a software, and that software needed an upgrade. So they lost kind of like 50% in that segment, which is 25% of revenue. So a big impact there. And basically, kind of our story is that there's a big growth in defense in Canada, and this company is kind of like overlooked because it didn't used to be a defense company a few years back, and one of the segment is hiding the growth of the company completely. So back
And
to
it's in
2025,
Ottawa.
but the organic growth is 0%. So
Mm-hmm.
you're it's really hidden, and they've been like a lot of the funds in Canada as well, and some of are in the US like have been burned on this company because they've been promising a comeback, but the segment is still doing poorly. But now a new CEO has been in place. So we choose to be the CFO, so he knows the story of the defense and their acquisition story. So we don't see this as a big risk. And this CFO, who's now the new CFO, will sell that segment. So they're going to sell that segment soon, which is what we believe. It's not expressively said, but that's what we think. They'll sell the segment. Now they're going to be a kind of a pure play defense company, and we think they can re-rate. I mean, it's really cheap on an EBITDA and a free cash flow multiple. So it's one of the
It's going up.
like
It's
a
going
lot.
up.
So there's a 540 million market cap, 11 million shares outstanding.
Yeah.
You know what? You know what they can sell this division that for? Yeah, any idea?
That's going to be tough. We have a financial model, and we prefer in that model not to sell because it's tough to know how much of that segment they'll sell. They won't sell the whole thing, so it's going to be the part that's tough. So, but honestly, even if they sell that segment for free, they just give it out. The market, we think, is going to see this company as the defense and could re-rate, because in Canada, the defense companies, they trade at 20 times EBITDA, 25, and this company is at something like 10 about at the moment.
Right, so I'm going to read this. For 40 years, Calian has delivered mission-critical solutions. When failure is not an option, trusted worldwide, we empower organizations in critical industries to overcome obstacles, manage risk, and drive progress. By combining the expertise of people, blah, 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 and cutting-edge technology, bold innovation, we deliver tailored solutions that solve complex challenges. So I'm assuming that, are they basically helping companies implement software technology, software and IT stuff to help improve processes, or can you give me an idea what? Because I have another description here talks about them being like you said, advanced technologies, health, learning, information technology, and cybersecurity solutions. So I'm wondering, it may be ideally, what do they do? Like, what are they doing for the customer? What's
So most of it is service company. So they will service the different segments that they do. Most of the segments now are defense. So for example, they will do training for defense in Canada and in NATO. So they'll train an army with, for example, a training program, so a service, and they have some products as well. Like they have headsets for military training, for example. So they'll go in, they'll sell the headset, and then they'll have a recurring service through the headset. But they have lots and lots of service, and that's kind of the point where it's so tough to understand and to kind of explain, because they do like everything they can. They acquire a bit everything. It's a bit of a portfolio company, but then the portfolio company is switching to all servicing defense across different types of ways. So it can be like in services, but it's also healthcare defense. So checking the soldiers in NATO, the routine checkups. They also have an online platform that is mostly defense as well.
Okay, they're doing. I think they just had last quarter. They did $1 a share in earnings. I see revenues were up 12%.
Yeah.
But I guess EBITDA up, not too much, right? But they have a lot of cash, 17 million in free cash flow.
It's still cheap.
Yes,
Yeah.
it looks cheap. Yeah. So do you think there'll be a re-rate in the valuation based on simplicity of the model? But do you think they'll see some growth here too at some point here?
Yeah. So what they've been saying, management, is it's about 5% organic growth of the company. Like they're growing 5% without acquisitions, without the defense. But now the defense, it's growing super fast in Canada and in NATO, like 10-20% per year. So because they'll change from normally growing 5 to having half of the business that's defense growing 10 to 20, maybe you're going to see the whole company grow almost at the double rate that it used to be. So you have earnings growing faster, and you have potentially what I think a multiple that is higher on the earnings as well, because it's higher quality business. Yeah.
Do you have any idea where you think it should trade at some point with multiple?
Well, we have price targets right now, but for me, like a multiple on EBITDA would be around the 15 to 16 EBITDA range, but that's an EBITDA that is normalized, because right now EBITDA is very low because they have a segment that's negative in their earnings.
So there's still a lot of upside, and we're already up much with the index with it. So
yeah. And how long have you owned this one? CGY.TO is a symbol again here for
couple of months.
Yeah, only 4 months now.
Great. All right. Well, that's been a good one for you. So let's talk about maybe some loose ends here. What we didn't cover. Was there anything else you got to we missed here that you want to kind of address?
Our losers.
Yeah. Okay. Sure.
So
it's always good. It's always good, right?
Is it what you said?
Well, I didn't say. I said loose ends, but if you have some losers, yeah. That's always humbling. It's humbling to hear your losers, your bad moves. Sure.
We didn't have a lot, so maybe people won't trust us. But Leo said, "Find some losers because they won't be. It's impossible." But I mean, it's
Well, in our personal because the index has launched in July, and since July we've done really great, and we don't have a lot of loser. But in our personal investing, we definitely had some loser. For me, for example, I was invested in a company called Titanium Transportation. They do trucking, so they just move around the materials. That's it. And basically, I thought it's kind of a micro cap, like 80 million. Market cap, and the story was last year. I thought that cutting the dividend, so removing the dividend, would be good for them, so they can pay back down the debt and come back to a better profile, better capital, and all that. But what happened is that they cut the dividend, the market got super scared, and they crashed to 50%. So completely wrong about this story, and I think even if now they're coming back and they actually got taken out last week at a 40% upside. So if you kept it, you'd be fine. But I didn't keep it. So I think sometimes you have to figure out, like, are the other investors, do they have the same beliefs in what the company should do? Because everyone just got scared and they all sold their shares, where I thought it was a good thing for the company. So it was a big loser. Yeah.
So I do want to ask you this. I mean, you basically you feel, I think you said, you feel the investment environment could be crowded at times, and you're trying to find these themes early. Is there a theme right now you think you're finding a little early that people haven't kind of locked into just yet? Is there anything you're looking at?
There's some. Could we say it, Leo?
Yeah, go ahead.
So I can talk about shipping. In shipping, there's containers, dry bulk, oil, crude oil, and product tankers. So there's many segments within shipping. And if you're a really good shipping guy, I mean guy or analyst or PM, you can really move from one to another. So that's really nice, because it's not like in mining where if gold is down, maybe every other mining is down, But in shipping, if container now is really not great because they build too much containers. So we think we just removed one of our key holdings. I mean, it's all equally weight, but one of our highest conviction stocks from a crude oil tanker, and now we are in a product tanker. So we think that a new bull cycle in this shipping segment is starting.
Okay, beautiful.
And rates are down. So, but they are like, we think it's like in chemicals, we're always trying to not buy it at the most lower price, but just before it turns. So if you're really good and really lucky, and there's a mix of both, can really, really be a good entry.
Okay.
So product tankers.
Yeah.
We won't say the taker, but product tankers, there's like 3 good stocks. We are in one. So 10% of the index is in it as of today. As of Leo, it's this week.
Yeah.
And I know SaaS, like software, is really hated recently.
I was gonna bring that up because that was
okay. So we are in a couple one. We are in one SaaS, but it's a particular one, and next week maybe we will add another one. So we are betting on this sector.
But for us,
the ride seems hard.
We're not picking the SaaS and the tech that are
it's
large. For us, it's like a small company that have built a product, and they have an edge in their niche, but it's still cheap on a free cash flow. And if you have those two factors, and if the management team looks good with capital allocation, even if it's SaaS, because we don't like the typical SaaS risky 40 times multiple companies. But when they're cheap on free cash flow, they have a moat in their niche. We like those kind of SaaS. Yeah.
Excellent. Do you guys know Conrad CNRD? Would that be in the shipping? Let me see these guys.
Conrad.
Conrad, CN, it's a US.
It's in the US?
Yeah.
Oh, we
Bills
don't do
and
US shipping.
Okay.
It can be listed in US, but usually I never choose them.
Okay.
Is it a container business?
They actually they build boats and barges. Let's see, they build
Okay.
steel marine vessels, barges, dredges, and dredge support equipment, tugboats, ferries, dry docks, lift boats. So it's not offshore supply vessels and other steel products for both commercial and government customers.
Okay.
Provides conversion, repair, and new construction services at 5 shipyards in Louisiana and Texas. So I probably, yeah, and it's $132 million market cap, so it's quite small. I used to own the company years ago, but it was it was an industry I couldn't understand too well, so I didn't. It's very cyclical, so I stopped investing.
We
in it.
are looking at some usually when you have, because we're better with tankers. So the 4 segments I mean, the containers are a bit different, but it's always not North Korea, South Korea that is the best shipbuilders. So
Okay,
there's like 4 or 5 stocks, and they getting a bit expensive because there's huge building of new tankers now.
great. But I guess when you do, you're done your DD. You will have disclose these in your index, right, on your Substack. You disclose these stocks eventually. You're talking about on your Substack, right?
Every
These
time
stocks.
we add one for the paid,
Yep.
we see it, and every time we remove one, we see it.
Great. So yeah, this is okay. I think we covered a lot today. It's been awesome. Love to have you back sometime, maybe, and get an update on the index. So tell us again where everybody can find you, so they can visit you and follow you.
Yeah, you can find us on aurelionresearch.com on our website, and you can find us as well on substack.aurelionresearch.com, which is the Substack. There's also a LinkedIn page if you want to follow, and yeah, that's it.
Are you guys on Twitter too? Thank you. You have a you, are you
Yeah,
really
I am bigger than Leo on Twitter.
I'm
but
just
Jeremy Boyer.
like not a real account. Jeremy has a real X account.
But we have an Aurelion Research account on X too.
Okay, beautiful. All right, been here with a Jeremy Bauer and Leo Trudell of Aurelion Research. I highly recommend you guys check out their Substack. And this has been a great lesson in trends and idea discovery process from you guys. So you're having a great success with your Substack and your index. I keep wish you
Thank
luck.
you too, Maj.
We'll talk soon, man. Okay.
Yes.
Thank you, Maj.
Great.